Thanks so much for tuning into the Trade Setup with me, Niraj Shah. Let's take stock of what the global markets and other cues are looking like. It's a bit soft out there. Keep that in mind. Oil prices have fallen as traders are unfazed by the Israel-Hezbollah escalation, maybe looking at the economics more than geopolitics currently. Heineken shares fell 10% after the first half profits miss, showing that a lot of these global stocks are falling like ninepins when the results aren't quite delivered. Asian shares are also weak ahead of a slew of rate decisions. FOMC biggest one, but there's BOJ as well. So watch out. It's a busy week from a rate decision perspective. In other news, China might, or actually the word says to stop, but let's assume might. China might stop publishing daily global stock flows in mid-August. Now, this is one more step which is maybe driving towards opacity, but who knows. And in other news, while we're talking about investments in emerging markets, etc., Temasek has taken a decision to invest up to $30 billion in US over the next 5 years. In fact, data from GIC and Temasek suggests that their Asian exposure is actually very low, lowest in 10 years or lowest since 2010, if I'm not wrong. So quite a bit of changes out there. But the US markets, what they did, precious little. NASDAQ down too, and Asia is a sea of red. Hang Seng, Nikkei, ASX, Kospi, Straits Times, everything has a tinge of red. Now, we've not bothered about what Asian markets usually do, but very likely that today we will see that bit of a downtake, excuse me, in our session 2 trade. And frankly, you saw a bit of that color yesterday, right? Because yesterday, for example, the trade setup for the day, the charts are constructive. At least the daily and the hourly charts are constructive, but these may change course quickly, as was evident in trade yesterday, right? Because yesterday you saw this, that from within kissing distance of 25,000, we came back, ended at 24,836, and there is significant call OI noted at the 25,000 strike on the Nifty, and therefore there's a bit of a resistance that the indices seem to be building at 25,000. One of the reasons could well be the Bank Nifty performance, because if you saw the Bank Nifty, it really cracked in trade yesterday from the highs of over 52,300 or 400. So I think there is some bit of selling that is coming in on the banks at those levels, and that is something you want to keep an eye out for. Pharma is showing serious strength and remains a pocket to monitor. Clutch of results today that you want to watch out for. Amongst other ones, 360 VAM, because of what some of the wealth firms have already done. Car trade could be an interesting one to watch out for. There is Dixon, which is ending very well, and certainly looking forward to the kind of guidance that they are giving. Gale is interesting because of the run-up that we've seen in that stock already. There is also Macrotech that we mentioned, Torrent Power, Varun Beverages, Vari Renewables, T-Target Rail. So a clutch of very important numbers to watch out for in the session. Stocks to watch in the session today. I'll start off with ACC. Standard disclaimer, the Adani Group owns ACC and the Adani Group owns NDTV, and you're watching NDTV Profit. But the numbers, revenues were down 0.9%, PAT was down 22.5%, and margins came off as well for ACC, 13.2 versus 14.8 for ACC. Now the City note, I think lays it out well. They have the target price is unchanged, by the way, 3,000 versus 2,600 currently, but they are saying what happened. So lower realizations, which were down about 8%, offset the benefit of lower costs and higher volumes. Volumes were up about 8%, by the way. The small problem for ACC, the net cash was at 27.5 billion versus 46.7 billion. So 145 rupees per share versus 250 rupees per share. Small negatives that came in. In fact, for ACC, because the results are a miss and the net cash has come off, you might well see some bit of weakness in the stock today. Where I believe the weakness might be contained is this. It trades at an EV per ton of $125, around the levels at which deals are being done currently. For a large asset, the valuations are not expensive. That might help ACC in the event of a sharp downtick today. So watch out for this one. Citi has a buy. I'm sure some other brokerages have a disappointing sell rating as well. Colgate Palmolive, Q1 FY25 numbers, contrary to ACC, all-round beat for Colgate. Revenues up 13% at 1497 crores. The estimate was 1429 crores. Margins did really well. 34% versus 31.6. The estimate was 33. PAT up 33% at 364 crores. Cities maintained a sell, but they've raised the target price to 2850. But look at, contrary to what Jefferies has done, they have a buy and the target price has been raised to 3570 versus 3020 earlier. They say they have upgraded their FY25 to 27 EPS by 6% roughly on average. And it's the third straight quarter of EPS upgrades. Watch out for Colgate. I think it's an all-round beat and very likely that the stock could react positively. HPCL didn't have so much luck. Weak quarter. Revenues were down, margins were down, PAT was down 87% at 356 crores versus 2843 crores. Now, ordinarily, I would suspect that this would bring the stock down to its knees because the numbers didn't look that great. But there's some LPG under recoveries which the street believes will come in towards the end of the year. Citi, for example, has an unchanged rating, and they say the target price is unchanged because they are incorporating the value of HPCL's equity contribution in the Rajasthan project, which has now become meaningful and distorts debt at 0.5 price to book. So therefore, watch out for HPCL. May not see too much of an adverse reaction. If it does, it might well see a bit of a bounce back simply because OMCs are in a good lot. Now I'll rush through some of the others. Pfizer, very good numbers. Margins expanded meaningfully, 31.5 versus 20.8. PAT was up. Very likely could do well in the session today, so watch out for Pfizer. Systematics believes that it will probably show mid-teens growth, and they have kept a neutral rating there. Maharashtra Seamless, weak numbers, revenues down, PAT down, margins crack. 10.8 versus 19.9, very likely could see a bit of a negative reaction. Data patterns could do well actually. Margins expanded to 35.7 versus 31%. The estimates were 32.9. PAT expanded 27%, could do well. Jindal saw very strong numbers. Revenues up 12%, margins expanded meaningfully, 17% versus 13.8. PAT as a result up 70%. Very likely could see a bit of a positive reaction here. Quest Corp was ho-hum. Margins cracked a bit. You will hear the management today at 9:30, by the way, on NDTV Profit. Some order wins for RVNL and ITD Cementation. So both of those stocks could be in focus today. Different order sizes, but both of them could be active. PNB Housing could be active. Carlyle Group is going to sell a stake. No guidance on pricing given, but very likely the stock could be lower today. And BEL could be active because Jefferies, amongst others, has raised the target price meaningfully because the numbers were very good and the order pipeline seems very strong. So watch out for this one as well today. Thanks so much for tuning in.